So, guess what? I have a new indicator for you guys. I know it's been a while since I released one of my top 100 indicators. I have played around with this for over a year. I absolutely love this indicator so much so that I'm ready to release it to you guys. It's not my indicator, but just release my opinion and how it can be used to you guys, maybe to help you guys with your NNFX algorithm. We definitely use it within our smart money concepts and ICT strategies. It's the almighty market bias indicator. Absolutely love it. Hope you guys do as well. Enjoy the video. Okay. But before we get started, I definitely want to let you guys know that I am considering really heavily incorporating this new strategy into my plan. I'm going to back test it and I'm going to see if it has good results. I made this up on the fly, like literally, it was just on the fly while I was making this video. You guys are going to see if you stay to the end of the video. I made it up as I went, and I really was impressed with not just this ROI, but just impressed of how many wins were there. And you'll see as I'm creating the strategy at the end of the video where I introduced you this market bias indicator to you. So if it is good, I will definitely put a strategy together for you guys on my channel, and I'll release the PDF and everything inside the Patreon. Remember, the membership is free. There are some, I've got obviously some upgrades, but you can get a lot of this content for free in the membership. It's just a great way, easy way for me to communicate with you guys on a regular basis. All right, without further ado, we're going to get started, and I'm going to introduce you guys to one of my favorite indicators. I actually use it every day, the market bias indicator. So welcome back to the channel and to the classroom. So in this video, I'm going to introduce to you guys one of my one of my top 100 indicators. I think it's probably my favorite because it just helps me stay on the right side of the trend, and also you can use it to hold your trades longer. I am talking about the Heikin-Ashi market bias, or it's actually HA market bias. It's a market bias indicator based on Heikin-Ashi candles, and I love the fact that it has built-in a color coding system where you can see when price is or the market may be weakening and may be strengthening based on this color coding system. It also now, as of November, has alerts built in that will let you know when the market bias has switched from strong to weak, or has switched from being bearish to bullish. So when I first discovered this indicator, it did not have that feature, and I added it to three or four of my indicators. I like it. I put it inside of it because I wanted to implement those features of, I wanted to actually see it, visually, and I also wanted to have the ability to get alerts, and also I have like arrows, like buy and sell arrows. Also, when it flips, you get that as well. But I won't go over that today. I will introduce this indicator to you. It's a very simple indicator, and then I will give you a basic strategy, an idea, just an idea of the way you could possibly use it inside of your algorithm. Okay, so let's get started. So the name of the indicator is, again, market bias. You can just type in market bias, and you're looking for the one by Professor X. Okay, this is the one that you're going to use. I'm going to add it to the chart, but first we're going to go over two things in his description. So first, he tells you how to use it. I like to see what the authors say when they say how it works, because then that gives me an idea of the original intent. Doesn't mean I have to stick with it, but it does give me an idea. So it said this script tries to determine overall direction of the market using smooth Heikin-Ashi candles. So that was a key to me. That's why I call it a Heikin-Ashi HA market bias, because it's based on Heikin-Ashi candles, and I love it. They're smoothed out, and it just gives me the trend a lot better. You guys know how Heikin-Ashi candles provide a good visual of the trend, and so it takes out a lot of the chop, and I like that. So this is a great indicator. If you like Heikin-Ashi candles but you want to use regular candles, you can use this indicator as well to just help you hold your trade longer. It also has a coloring system that I was telling you, bright and dark colors, as an attempt to detect strong market and weak market conditions. Okay, bright means strong market conditions, weak means and dark means weak market conditions. Okay, also it right here, it has two new features as of November the 20th. It has alert condition where now you can set your alert for events for the trend switch, strengthening and weakening for both bullish and bearish trends. I love the fact that that's inside of there. And you also have the multi-time frame functionality. Again, I already put that inside of my indicator, but I just love the fact that it was updated with this indicator, so you really can do basically everything you really need to do inside of this indicator. So let's go ahead and get inside of it, right? So here we are. One thing I will just tell you guys, I don't really like to see the actual candles. So these are the Heikin candles right here. And you can see, notice how it gets flat, like when there's a curve, like when it's really curving. If that helps you, definitely show it. You can see it's getting stronger, as you can see here. And then here, let me see if I get it. It's getting smaller, especially using a daily time frame. Maybe you can take the time to see it. I use it on a lower time frame, so to me, I'm not paying that much attention to the size of this. I'm just actually looking at market structure, so I don't need it. So you have the ability to turn it off. So a lot of times when you see it on my chart, you won't see these candles. Okay, that's just, I'm just telling you that now. You won't see these candles on my chart, right? So it'll look more like this, a lot more smoother. Okay, and like I said, you have the ability to take it to a higher time frame like functionality. So if let's say we are on the daily, right? So let's say we do want to trade it. Oops, let me do that. Let's say we do want to trade it on the weekly time frame. You can just go to market bias, and let's say you go to the weekly, and it will adjust for the weekly. So as you can see that it's been for a while. It's very bullish on the weekly excuse me time frame. So how do you interpret like these weak areas? These weak areas is when the indicator picks up that there's a pullback. Now the way we trade, if you're trading in an FX method, if you're entering on a daily, I personally think that you won't get many trades using it based on the weekly time frame, right? I think I think the best thing to do is just leave it on the chart, right? And that's going to give you more opportunities to trade. If you're waiting for it to change colors, and what I'm saying, you won't get that, on the weekly, unless you change up your period, right? So let's say you want it to be more sensitive. Let's say you make it 21 to 21, and this is, especially if you guys decide you want to use this as a baseline cross, you're definitely going to want to make it more sensitive. You're going to want to make it smaller, the number smaller, because you won't get many opportunities if you don't make it a lot smaller. Let's go even smaller. Let's say you want to go, let's say 9 and 9. I just want to show you the differences. So it follows it a lot closer. Does that make sense? Let's go a little. So baseline cross, as you can see, and then once you get into the trend, here's the pullback. It's definitely more sensitive to the pullback when it's smaller like that. But I recommend using it as one of your confirmations of the overall trend. That's really how I say market bias for a reason. I would say go 50 or 60 or 100 for your market bias size. Go just a bigger size to give you a better idea of the overall trend, right? And not necessarily as a baseline cross. So let me show you what I mean. So like right here you can see price, it crossed this market bias, right? This, you may call this a baseline cross, but if you notice, the color is still red. So for me, if I see the color still red, I'm not going to sell. Does that make sense? I'm not going to sell because even though it crossed this baseline, it's still red. The market bias is still selling. Even though it's weak, it's still red. I want to make sure it turns green and then gives me an opportunity to trade, right? Same thing here. It turns it crossed the baseline, but that's still not necessarily a sell signal. It's still green, so I want to make sure it's red. What I like is when it pulls back to the baseline. If you're going to use it like this, when it pulls back to the baseline and then it crosses down, right? So we have a cross down the baseline and it's still red. That to me is a stronger signal, right? You can put your stop above here, and let's say you're looking to take, the swing low. Just give an example, and you get that opportunity. It wins there, right? Also, the other opportunity was this one here. Crosses down here, definitely takes out this low, and it takes out this low. So two trades, two opportunities to get in based on that. Notice how it crosses back up here, baseline cross, but nothing, right? I wouldn't take that. I'll wait till it comes back to the baseline, and you can see how it wicks and goes back up. This will be a better trade right here. You put your stop wherever you want to put it. You can put it here. You can put it below this level. I would stretch it out a little bit, and then you want to target your swing high and go from there, right? So that could be how you use it. If you're going to use it as a baseline cross, I suggest making sure the colors match. Okay, that's what I'm saying. But I find one of the best ways to use it is actually as an overall market bias, as just an extra confirmation. So let's go back here and let's put it back on the basics, the default setting, right? All right, and now let's come up with, I'm going to give you a very basic strategy just to give you an idea. This is not a strategy for you to use or implement, but it's just to give you an idea of how you can use it as a market bias, right? So I'm going to now turn on my EZ Peezy color EMAs, and I'm just going to use I'm going to show you how you can use different ones, but I'm going to start out with, let's start out with the 8 EMA, right? So if we're using, let's say, the 8 EMA, right? We're saying if the market is bullish, I'm looking for a bounce off of it for an entry, or a cross for an entry, right? And that would be how I would trade it, especially in the pullback like this. Like this would be a nice, this is a W, this is a really nice setup, okay? So, but if it's a bounce, if it bounces off of it, I could use it, and let's say I'm gonna take my profits at the top of it, okay? So I'm also going to include the volume, right? So I'm going to double click on this. I'm going to actually turn on my multi-time frame trend meter, and I'm going to use the volume to the water attar. That's the indicator. You guys know I love it on my charts, one of my top 100. I'm going to use this to give my bar a color, right? So that's all I'm using it for this strategy. So if it is a uptrend, if it's trending up, it's going to be green, and if it's really strong, it's going to be bright green. If it's trending down, based on the volume is strong to the downside, it's going to be bright red, and if it's weak to the downside, it's going to be orange. Okay, so there's 3 parts to this, right? So I'm using the baseline is my EMA, right? I'm using the volume it's my candle color, right, which is basically the water tar, right? And I'm using my confirmation. I'm using the market bias, right, as my confirmation, right? So that's very, 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 very basic. If I want to add another confirmation, then I could possibly use another EMA, right? So then I could say that's confirmation number 1. I like 2 confirmations, guys, as you can see. And confirmation number 2 would be EMA number 2. And the requirement is that they must be in order, right? So EMA number 1. So I'm going to show you what I mean. So now I'm going to turn on this another EMA. Let's say, since I have the 8, let's just do the 13. Right. So in order for this to work for me, and I'm going to make the main one that I cross, I'm going to make EMA the second one, I'm going to make it bright, And I'm just doing this so we can see the difference here. And let's make it a step line. Is that the one I'm showing? 1 and 2. Oh, not showing that one. That's why I didn't move. We'll make this one a step line. Yeah. And we'll make this one bright. So I can just clearly see the differences. All right, so in order for me to take a buy, it must be up, right? It must have a bullish move, and baseline must be crossed to the upside in this zone, right? It must be this way, and these two must be in order. So the bright green line must be above the step line. Does that make sense? And then if I'm selling, if it crosses down, I need to cross down, and it needs to the bright red line needs to be below the step line, and I want the market bias to match. Does that make sense? And of course, based on this market bias being a 100, and 100 is going to be very it's going to take a while for that to happen. But just to give you guys just an overall idea, you choose whatever numbers work for you. So let's say we get into this pullback here, and then I want to take the trade. So like this right here, it crosses up the market bias, right? I mean, it crosses up my baseline, but it is orange. Okay, so I don't like that it's orange. That means that it's the volume is not just weak, it's just bearish. It's still bearish. And as we see, price, it comes back down. Even when it crosses here, it's the right color, but it's not the right order. Here, it's hard to tell here, but when it crosses here, it's the right color, and it looks like the 8, yep, is also at the moment that it's crossing is also above the 13. So this, out of all of this movement, this is my buy signal. I'm looking to be a buyer in the marketplace because of this. All right, this is where this is green. All right, so that's going to give me a nice entry. Okay, let's say 1 times the ATR, whatever the ATR is, and I do have an ATR indicator as well that gives me that, lets me know what is 1 time the ATR. But let's just say we're going to target this swing high right here. So winner, winner, chicken dinner, right? And then we see price comes back to the 13. It wicks off of it, and it does not close below it. But let's just say the continuation, we want to see it wick off and then come back up, and then this will be the target. If we bought here, we do eventually hit the target. Okay, same thing here, bought here, we do hit the target. And then notice it's the colors of the candle. So I'm not even looking to buy in here. This will be another buy signal, right? So this will be a baseline cross. This is an actual baseline cross, and I'm following the market bias on that. All right, so these are continuations, but this is the actual baseline cross. And if I'm targeting this, that's also another winner, right? So if I'm targeting this high right here, it's the winner. And if you trade with us in the classroom, you'll also figure out how you might be able to get in at a better rate. You notice price always moves back, and you can have an area to get in at that'll give you maybe a better entry. But yeah, so that still is a winner in the way we trade within an FX method, right? So then we can see price is crossing down, and this is the actual one that actually crosses, that's in the proper direction, by the way. These crosses don't matter, maybe this one, but this is the one that you can see is going to pull back, right? So now I want to show you guys something. This one, this cross is pulling back, and this is strong. So if you're following the order flow, you're not going to take that one. But notice how this one is weak. When this one crosses, let's see, it has to cross back up and crosses back down. This one potentially could be a baseline cross for you guys because it's weak. It has a weak order flow, right? So if you do want to take it in the opposite direction, you just might want to make sure that the market bias is weak, right? And then we see that price comes back, crosses back up. So when it crosses up here, it's not in the right order. No, it's not in the right order, so you don't have an entry here. You do have a little cross here. Oops, not the right one. Sorry about that, guys. You do have a little cross here. It's weak. Now, here's the thing. I would look for pullbacks to the market bias, right? This is not a pullback to the market bias, so I wouldn't be interested in this. I want to see price pull back to the market bias. You do get another sell signal, another sell opportunity. Looks like this is crossing at the same time. Sell opportunity here. It wicks, another sell opportunity here. A nice trade down to this level. Nothing here. It's not in the right order. If you're looking for it to be in the right order, this one is. It's crossing it all at the same time, but they're crossing, literally is crossing down. So this one is another nice sell opportunity. Why am I looking at sales in this market bias? It's weak. It's telling you that it's pulling back. And as long as everything is in order, I could take the sale, right? But if it was strong, if this was bright green, I wouldn't be interested, okay? Now this one is also bright red, so we're not supposed to look at it. We need to see price come back. And here, this is the one that gives us the market, the entry. As you guys can see, it's a winner if we're going for this high here. Another opportunity when it wicks like this and comes back up like that. Another opportunity to get in. Again, it goes for this high here. This one is also, I can't tell if it's crossing or not. Yes, crossing, everything is crossing at the same time. So by the time this is finished, it is above. And now now this right here is too high of a target. I would not go for this way up here. I would just go for where they close right here, where there's a pivot. This one closed here, and this is like the pivot down. So I would go right here. And that's where you can see it would have been a profitable trade. All right, so these I would not take any interest in because there's no weakness here, right? Same thing, maybe this one, yep, this one. And you're targeting the swing low. They definitely hit that low. It's turned back around, and this is the one that gives you the entry. And look at that move. So I hope you guys can see, and you would still be in this one. You could still be in this one, especially if you use this step one as your trailing stop. Like, look at this potential trade, right? So get in here. Like I said, the stop loss you want to use, you want to make it below the mark, the EMA. And then if you held this and then you started trailing this, look at this. This was, you would have bought back here in March, and you would just got knocked out right here Monday, April the 22nd. Almost 2 months. And this is 19%. You could have grew your account by 19%. You're going to find those as they're going to take off, right? You're going to find that happens. So yeah, so definitely consider using this market bias in your trade. Again, I just gave you a very basic strategy. Do not take this, don't use this as like, okay, that's how I'm going to use my strategy. You can back test it, see if it works for you. And this is on gold, right? So this is trading gold. I didn't even realize I was doing this on gold, but this is trading gold, and it worked very nicely. So you just want to create your rules, stick to your rules, as you guys already know. Find the indicators that work for you, and handle your risk, right? Risk management is very important. So add it to your chart, see if it works for you. I would love to hear in the comments how you use the market bias in your trading strategy. Like, I would really love to your feedback on this, because I really like this indicator. All right, guys, thank you guys for your time, and I look forward to seeing you in the classroom. Like, subscribe, share, and remember, we have live trading sessions on Sunday evenings. If you would like for me to maybe incorporate the NFX method into some of my market analysis, let me know if you're interested. Right now, I just focus on smart money concepts. We're just looking for zones and areas where price may have a strong reaction to throughout the week. But if you would like for me to look at some other analysis or Again, it's kind of hard to do that because with NFX method, it's your method, right? But I could always maybe point out some zones, maybe on the higher time frames, where price may have a reaction and you may get an entry. All right, guys, thank you guys for your time. Don't forget to visit the Patreon membership. Again, it's free, it's open to everyone. You guys can learn these smart money concepts with us. You also get links to the live sessions inside of that, and if you want to get access to the indicators, you can definitely consider upgrading. All right, guys, thank you for your time. I'll see you in the classroom. Bye now. So welcome back to the channel and to the classroom. So in
guys,
this
I
video,
really,
I'm going to
really,
introduce
really
to you
like
guys
this
one of my
potential strategy. I can
one of my
already
top
see it.
100 indicators.
I can build it
I
inside of
think
my EZ Peezy Forex
it's probably
indicator. So stay
my
tuned.
favorite,
I'm going to back test it just to
because it
see
just
if it's
helps me
worth
stay on the
putting in
right
there.
side of the trend.
And if it
Also, you
is,
can
I
use
will
it to
update you
hold your
guys with the
trades
new updates.
longer.
So guys, again, thank you for your time, and I'll see you guys in the classroom. And I don't have any next videos as of right now, but they will be coming soon, maybe potentially again related to this indicator. Okay. Thank you guys for your time. Talk soon. Bye now.